Well, it's been a wild few years for interest rates. In 2019, 1 year before the pandemic hit, rates were at a historical low of 3.94%. 2 years later, in 2021, we saw a new historical low of 2.96%. What an opportunity for home buyers and investors who locked in these once-in-a-lifetime rates. However, those rates are a thing of the past, unfortunately. And more recently, in 2023, rates were up again, with the average 30-year mortgage rate at 6.81%. This year, we've started to see a slow and steady decline. We actually saw a big plummet just last week and more coming very, very soon. With this much fluctuation, how can you know when it's the right time to buy? And that's what we're going to talk about in today's show. We're going to cover the history of interest rates and how the rates that we're currently seeing might be measuring up to what we've seen in the past. And what does this mean for you as a real estate investor? So let's get into it. Now let's go back in time a little bit here. Let's take the DeLorean and go back in time. Take a look at this chart to get a perspective how mortgage rates have changed over time. In the 1980s, early 1980, rates were at 13.74%. In 1990, the average was 10.13%. And through the early 2000s, rates were in the 6 to 8% range. Are today's rates up from 2019 and 2020 and then 2021? Absolutely they are. But remember that rates were artificially low during that time period. So in the context of the history of rates, we're not in a bad place at all. Of course, you can argue that prices are up as well. That's absolutely true. But the economy has changed on the whole. I've heard from so many people who are waiting for rates to drop. Most economists are predicting rates may hit the low sixes by the end of the year. That's not that big of an adjustment. No one has a crystal ball, right? Anything could happen, but personally, I would not be waiting for rates to hit pre-pandemic levels, if ever. I always want you to remember that interest rate is not the only factor that should go into weighing the merit of an investment. Something that has always stuck with me is something that Robert Shemin once told me here on the show. He's a great real estate investor. He said he would always take a deal if his returns are higher than his interest rate. He would always take that deal any day of the week. And I think that's a great perspective to have. I always want you to think about what is in your control. The market ebbs and flows. Interest rate is one of those factors that is outside of your control. You can't time the market. It's a losing game. So what can you control? Well, the types of deals you buy, what types of returns you're making, the markets you invest in, how to utilize your resources. And if rates are really freaking you out, let me give you some action steps. Number one, shop around. Make sure you're getting the best rates and services by comparing rates from multiple lenders. Number two, look at your local banks and credit unions. Never discount the power of shopping small. Your hometown banks and credit unions can usually offer competitive rates with additional incentives thrown in. Sit down with your local banker and ask how they can help you reach your goals. Number three, work on optimizing your credit score. A buyer with a better credit score can usually snag a better rate. Again, this comes back to controlling what's in your control. If you can work on improving your credit score, you're putting yourself in the best position possible. Number four, work with a full service team. At my company, Morris Invest, we work with over 200 different lenders, and we run negotiations to get our clients the best possible products with the best possible rates. We offer multiple financing options, and we'd love to find a product that works for you. We'll get back to that video in a minute, but first, I need to tell you about a golden opportunity for investors that's happening right now. Mortgage rates have plummeted in anticipation of the Federal Reserve cutting interest rates at their upcoming meeting in September. Now, it's good news for buyers, and it has presented a unique overlap in the investing world right now. Remember, when mortgage rates spiked last year, well, a lot of sellers started offering incentives to help investors achieve positive cash flow. For example, my company, Morris Invest, and our team over at Sedera Wealth started offering clients a rate buy-down credit. Now, a rate buy-down drastically reduces your mortgage payment. If you've ever run the numbers on an investment property, you know that's a big deal. Now, here's where the golden opportunity comes in. When mortgage rates change, it can take a while for other things like seller incentives to start catching up. So even though you can get a mortgage rate in the low sixes right now, and that could be even lower by the time you're seeing this video, right now you can also lock in a rate buy-down credit on top of that. And this is huge, people, huge. With the two combined, our team's finance expert said he's seeing our clients locking in rates he hasn't seen in years. But here's the catch. The window of opportunity here is very narrow. This overlap will close very soon. So those seller incentives are going to fall off very, very soon. There are two more reasons to move quickly on this. One, prices are rising week over week. And now that rates are going down, they're going to spike even more dramatically, which will be made worse by two, increasing competition. Potential buyers have been sitting on the sidelines just waiting for rates to drop. And now that they have, they're going to flood the market, reproduce bidding wars, pushing prices even higher. If you need a refresher on the advantages of owning real estate, like how it delivers 4 streams of income through number 1, appreciation and equity gains, number 2, principal reduction by your tenants, number 3, tax benefits and depreciation, and number 4, cash flow, I'll link another video in the description so you can check that out. But if you've done your research and you already understand why build-to-rent properties in high-growth rental markets are a great path to financial freedom, then take action right now. You do not want to miss out on this opportunity to fast-track your investing strategy. Cash in on this narrow overlap of lower rates and seller incentives while it's here. Click the link below and schedule a free call right now. It could be the most important call you make this year. Number 5, consider rate buy downs. Depending on your lender and loan type, you may be able to buy down the interest rate on your purchase. This is a smart move because it improves your cash flow and it gets you into an investment with rates below the market. Number 6, think about the worst case scenario. What will you lose if you choose to wait? And what are the disadvantages of getting an investment with a higher than desired interest rate? This is up to you to decide. It's a personal decision. Weigh the pros and cons for yourself. It's up to you to decide if the time is right for you to invest, but I hope I gave you a few things to consider before letting interest rates hold you back. I'd hate for you to put your personal goals on hold because of what's happening in the economy and what the Federal Reserve does. You're going to give your family's future over to the Fed? Come on. If you're waiting for market conditions that may never come, that's a huge missed opportunity. So if you'd like to discuss this time and if it's right for you to invest, schedule a free call with our team. It's a 30-minute call, totally free. We'd love to jump on the phone, learn about your goals, help to create a customized plan for you to buy rental real estate. Just go over to our website, morrisinvest.com, click on the big red button, and tell us when you're available to talk. And next up, here's my video on 5 financial myths that you need to unlearn in order to build wealth. Watch that video, and we'll see you there.